Hi, this is Warlow from Business Loan Services and welcome to my Friday Business Finance Bulletin, my weekly roundup of news, tips, ideas and strategies on raising finance and dealing with banks. So what have I got for you this week? Well, I'm going to be looking at the importance of understanding your credit score. Also going to be having a brief chat with the owner and founder of fundingempire.com, a crowdfunding site. I'm also going to be looking at a new kid on the block, a new bank launch to help growing SMEs. And in my tip of the week, a clip from a recent seminar that I did looking at projects that banks are not interested in. So let's start off with some good news and some bad news. The good news, UK economy is growing. News out this week that the GDP is on the way up. But the bad news is, I mentioned in previous bulletins, that growth needs cash. And that's a problem for many businesses. Now, there's an insolvency trade body called R3 recently did a survey and they came out with a finding that they reckon there are 154,000 zombie businesses here in the UK. Now, what's a zombie business? You know, it's like living in a horror film, when it may be if you actually run a zombie business. And a zombie business is defined as those businesses that essentially are just paying interest only on their debts. They're not making any major inroads into repaying the underlying capital or underlying amounts that they owe. Now, this is of concern because, as I said, growth needs cash. And if these businesses are only just managing to generate cash sufficient to pay interest, their chances of actually getting the working capital they need to fund growth is quite slim. And one of the reasons why we've got these zombie businesses, R3 reckons, is the late payment culture that we've got. Businesses just can't generate the cash. But worryingly, they reckon that 135,000 businesses are currently under negotiated terms with creditors. They've basically gone out and said, you know, we can't pay you in full, we're just going to have to pay you a little bit every week or every month. And 100,000 of them says that their business would be at risk if interest rates rise. Well, we know interest rates are going to rise sooner rather than later. And so if you're running one of these zombie businesses, my advice is to get out there and get some professional advice and support to make sure that you can try and survive this problem that you're going through. On the more positive side, it's a growing alternative sources of finance out there, and here's another one to add to the list. Another new bank recently opened its doors to commercial lenders, and this is a bank called Secure Trust Bank, securetrustbank.com, subsidiary of the well-known banking group Arbuthnot, and they say they've just started lending on commercial terms, looking at asset-based lending. Now, asset-based lending is essentially invoice discounting and factoring. That's where you have some invoices and you need the cash today instead of having to wait 90 days or whatever your terms may be. They're looking to support businesses with turnover ranging from £250,000 up to about £35 million, and they can do funding lines up to a maximum of £15 million. So they've got offices now across the UK in likes of Bristol, Leeds, Birmingham, Manchester and across the southeast. So if you want to have a look at releasing cash that you've got locked up in your invoices, check them out, securetrustbank.com. Recently, in fact last week as I record this bulletin, we exhibited in a business show here in South Wales in Cardiff, run by Introbiz, and we had the fortune of having a stand next door to a crowdfunding site called fundingempire.com, and so I was able to grab a little brief time from Parag Patel, the owner, his busy schedule on that day. He had a very busy stand there. People wanted to know all about crowdfunding. So I just asked Parag to give us a quick overview of what Funding Empire does and what it looks for. So let's go to that quick conversation now.
Hi, I'm Parag Patel from Funding Empire. At Funding Empire, we connect individuals that wish to lend money with businesses that want to borrow money. We accept loan applications from startups and trading businesses. Our loan values go from £5,000 to £100,000, and anything over £50,000 must be secured. We look for energetic, proactive, credit-worthy businesses that are really wishing to grow their business and are looking for some capital in order to do so.
Right, okay. So what type of businesses do you have coming to you? Are these the ones who want to bypass banks completely? I've just said, you know, I don't want to bother going to a bank, let me try something different?
A number of reasons we've had from borrowers of why they've actually approached us as opposed to a traditional bank. The main answer that we've had from them is actually the time it takes for them to assess their application and even get a decision. So some of our borrowers have been in the cycle for about 2 to 3 months and still not got anywhere. A flexible peer-to-peer lending model like ours means that borrowers can, from time of application to receiving funds, can be as little as 21 days.
Right, okay. So you offer a really much speedier service than compared to banks?
Definitely.
Yeah, good stuff. Thank you.
Perfect.
So if you want to know more about Funding Empire, just check out their website, fundingempire.com. Now, I've talked previously about the importance of having a good, strong, clean credit file. Every year, so there's a guy called Professor Griggs who goes around banks and asks them to reveal the files on which they've said no, and he goes in and examines them to see why they said no. And for loans below £25,000, the biggest reason, in fact 52% of the reasons for no, were down to a poor credit file. Now, there's a new survey came out by Experian, the credit reference agency, and they discovered that only 13% of business owners surveyed knew what goes into making up a good credit file. And in fact, only 41% of those surveyed have said they've ever checked their files. Now, that's much lower figure that needs to be. You need to be knowing exactly what is registered against you and what goes up to making a good file and a bad file. So what are those factors? Well, Experian say the 2 things that make a good credit file are prompt payment to your suppliers. There's a good track record of you paying on time, that sends a strong signal. And if you're a limited company, well, that's filing your audited accounts on time. What about 2 negative things? Well, from a personal perspective, bankruptcy. That stays on your file for 6 years and really sends a wrong message out to the marketplace. And secondly, it's having too many credit searches registered against you in a very short space of time. So this is where you've gone out looking for finance and you've tried many lenders and they're all doing credit searches at the same time. That kind of sends a signal that you're desperate for cash. So if you've not checked out your credit file, make sure you can do that. You can get it for £2. That's all it costs. You can go to Experian, Call Credit, Equifax, £2, that's all it will cost you to get hold of your file. So what's my business tip of the week? Well, I got a clip for you from a recent seminar that we did for the Business Wales Support Organisation, which is part of the Welsh Government here in Wales, and we were running a half-day Access to Finance workshop. And in this clip, I share some thinkings behind the bank's analysis of when they say no to you, what kind of projects they want to support. So listen to this very carefully to make sure you don't fall into this trap. So the first thing that they want to look at is the purpose of the request. What do you want the money for? Because there's an important thing to remember here. Banks are not interested in lending what I would call get me out of jail money. A bank does not want to support you if you've got VAT arrears, PAYE arrears, NI arrears, any sort of corporation tax or personal tax arrears, anything like that. It's not really going to want to support you if you go in one day and say, do you know what, I've got the bailiffs coming in at 3 o'clock. Any chance of 20 grand? Yeah? That's not what they do. They are not in the business of supporting you to get out of a problem. What the banks are looking for today is to support a growth project, something that adds value to your business. So it's the purpose of it. What are you doing with the money? So if you're going to be saying, going into the bank, saying, look, we're looking for 50 grand to buy this piece of equipment. What this piece of equipment will do, it's going to improve the efficiency within the business by 20%. By doing that, it's going to boost our bottom line by at least £10,000 next year. We calculate that your loan repayment is only going to be about £3,000 a year. It makes financial sense for us to do this. Okay? That's a good value-adding project. So it's really back to what we were saying before about one of the reasons why businesses borrow is for purchase of assets. Now, banks are more keen on that because they can see that it may add value to the business. So the people who say that banks aren't supporting, they won't get the money if they wanted to support losses or, as I said, to get me out of jail. That's not going to happen. So the first thing to think about when you're putting finance together is you've got to put it around a specific growth project. It makes it much more exciting and much more compelling to the bank because they can say, we supported a business that went from here to here by advancing this particular sum of money. So remember, banks only want to see value-adding projects. So that's it for this week. I hope you enjoyed this bulletin, and please, as ever, if you did, please share it amongst your colleagues or share it on social media. It all helps. And in fact, this week it was great to see on episode 43 we actually had somebody from the States asking, is there a Rob Warlow in the States who does this kind of video? So and not that I'm aware of, but hey, thanks for the question anyway. So it's good to see we have a wide reach with this bulletin. So that's it for this week. I look forward to being with you again next Friday, sharing some more tips, news and ideas on raising finance and dealing with banks. See you next Friday. Bye-bye now.